What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is December 3rd of 2018. Well, folks, I hope you all are having a wonderful day wherever you are. It is time again for a daily update here on the DataDash channel, and we've got a wide range of different topics to discuss here on the update. As always, we're going to be taking a look at market valuations as well as doing some technical analysis on the market leaders. But outside of this as well, we've got a wide range of topics to discuss. I want to spend some time not only to kind of go through the current state of the market, but also talk about an article that I saw that I think resonates with a lot of people. And I want to spend some time not only to kind of clarify a point over that article, but also share to a point that I did in a video yesterday, which I actually ended up removing because I think I didn't word my point very well. So I want to kind of re-clarify on that. And along with that as well, I want to spend some time talking about the trade war supposed short-term agreement or recent meeting in Argentina at the G20 summit, and really what this means, and to kind of get a good sense of clarification as to what we should be looking for. And also, Deutsche Bank supposedly denying any, accusations of potential mergers or acquisitions from larger banks. And last but not least, as always, we'll be taking a look at equity markets as well as commodities. So we've got lots of things to discuss. Let's not push it off any longer and dive right into the update. So guys, as we take a look over the past few hours, markets are relatively neutral. We have Bitcoin down about 2.7%. However, we have a few altcoins in the green here, a few oddball players. Decentraland has been one of those few that has really started to pop up out of nowhere. Sometimes you get these big volume spikes and people buying in. However, for the most part, a lot of the ones that are up are stable coins across the board here over the past 7 days. Definitely some positive price action for the most part, but really in the past 24 hours, things are obviously going to be a little bit more down rather than up, seeing as Bitcoin is down 2%. Going on here to market overview, we can see we're quite neutral here. We've stopped making new lows. If we take it down to the 30-day, looks like we might have a chance to start moving higher, but I got to be fair with you all. As much as I'm not capitulating, I think a lot of people thought that from my last video. I definitely want to explain that there is a possibility we could be seeing lower levels. I'm not panic selling or anything like that. I'm just remaining patient, waiting to see if we get some potential buying opportunities. There's a lot of key indicators to watch, as we'll discuss later on in the video, in order to check for a bottom in Bitcoin. And I'll go over some of those indicators in just a little bit. But for the most part, things at least aren't bloody at the moment. The Bitcoin dominance chart is actually probably the most optimistic factor that I can think of right now in the market. You can look at this chart and you would think that we're on the cusp of like setting up for the next big rally, and we very much could, but it is amazing to see that Bitcoin dominance is not surpassing the levels it was back in September. Now this is obviously due to a few things. Not only have cryptocurrencies like Ripple done very well, but you've also got things like Stellar Lumens and a lot of other players that have surprisingly done well in a market that really wasn't built for altcoins at the moment. So it's very fascinating stuff. And not to mention, just generally, if you take a look here at other coins have been increasing dominance all the way back since November 20th. Very interesting. So I'm going to be keeping an eye on that, see if we see any big trends picking up there. But nonetheless, let's go ahead here. Take a look here at Bitcoin. In the short term, one thing that I would recommend you guys take a look at on the daily is a line of resistance here that is going to continue to play out until we break above it. And I got to be fair, if you see Bitcoin really having a good hour or 2 hourly close below 4,000 here, guys, I think you could very well see at least Bitcoin test these lows, and I wouldn't be too off-put by the idea that we would see somewhere in the low 3,000s. And I'm not saying that again, guys, because I'm bearish on Bitcoin and stuff, but we're in a corrective period, and Bitcoin goes through pretty sharp corrections, anywhere between 80 to 90% in its history. So now that we've kind of seen the majority of it, I think it's pretty clear that it's probably going to repeat that price action. Not exactly like history has done in the past, but very similar to it. And we can see, I'll give you guys one of the telltale signs why this is making me confident that we're going down to some of these lower moving averages, is because when I take a look at the price, not only did we not really get a strong rebound here, it was nice to see the green candle we got here on the 28th of November when I was in Estonia. It was awesome to see. But not only that is, not only the fact that there has been not enough green days to follow that. In fact, we've actually consolidated a lot of that price action. But the RSI, which was the most oversold we have seen in a long period of Bitcoin history, even back towards the 2014 and 2015 correction, we saw Bitcoin reach crazy levels on the RSI and hold there for a matter of almost 2 weeks. We've just barely gotten out of the oversold area on the RSI, and we're now starting to roll back into it. So I think we do have full panic and capitulation in crypto. And as you can see, guys, I'm not getting emotional. I'm just letting you all know. I think that's honestly the state of the market. People are fearful that, I've been seeing the comments everywhere, Bitcoin's going to zero, this and that. And really, it's just simply what Bitcoin does. It has done this historically, and it will continue to do it. The lesson that I really learned from this correction, guys, is that when Bitcoin got around to 6,000 to 7,000, I'll be fair, that was the level I got really confident in Bitcoin. And I thought from there we could start to see higher levels. But I ignored the long holding statement in financial markets that history tends to repeat itself. And Bitcoin, in its short period of history, has shown that is the case. It likes to repeat price action. So I don't want to spend too much time, obviously, tracing altcoins, guys. You know my general stance. It's going to follow the market, predominantly Bitcoin in this case. But I'd say to watch if you get a holding on 4,000, and if you can continue to hold this level and actually break above this line of resistance, then we could start to test towards some higher levels, possibly over the next few weeks, up to, I think, the next point of resistance, if we take a look here at the daily, which is the big even of 5,000. So watch that, see if that happens. If we do get a break above there, could be an interesting little trade opportunity, but we'll have to see, and you guys get to assess that for yourself as well. But anyways, those are the major things I'm watching. Not overcomplicating the price. As you all know, I'm generally either a guy who uses basic TA or I naked trade. I look for previous resistance and support, and it's one of the best sets of indicators you can use in crypto. And it is definitely something that will get you much further ahead than crowding your chart with a bunch of indicators. I want to go ahead here, though, and spend some time to not only clarify on a point that I talked about yesterday, but also to kind of lead into an article that I think relates to a lot of people in the crypto space. A lot of people feel that they've caused a burden on the cryptocurrency space, or that, as a collective, we've like kind of ruined the moral philosophy of crypto. And basically the title of this headline on CoinDesk is written by a guy named Michael Casey, is titled "Crypto Winter is Here and We Only Have Ourselves to Blame." So this is obviously, to give you a short summary, you can read through it. I recommend you guys give him a chance. I think he wrote a decent article. And he does point out some interesting things. There was a lot of really bad activity that came out back in, I definitely saw it like peak November and December. The amount of selling of cryptocurrencies to people without even, bantering the idea of saying, hey, before you get into this, get a little bit of education on it, see if you really want to get into this and understand some basic concepts of financial markets, because you're getting into a new industry of currency that is pretty much at the equivalent stage of the internet in 1993 to 1994, very early days, not even .com-esque levels. But the thing is, yes, maybe there was some bad practices, but this really kind of plays off to the stigma that just because, we were in something for a speculative nature and that we told friends about it, that we ruined the philosophy of crypto, or that we dismantled cryptocurrencies in the long term, and we only have ourselves to blame. And as someone who, ironically enough to the old meme, does actually believe in the tech, is really excited to see what's going on in Venezuela, I know very well that we didn't destroy crypto. Cryptocurrencies are not only not destroyed, but they are going through a very necessary cycle. All new technologies go through very speculative phases, because until we really get the S-curve of adoption, the real genuine use of cryptocurrencies, and again, there's STOs and all types of different markets that are going to pop up over the next decade. I can't even fathom what people are going to create. And who knows, maybe they might have a lot of value. But I know that it is going to be a currency market in the long term. And until we get people making that dramatic shift from fiat currencies in different areas of the world, that's the key point here, not in the United States, not really in Europe or Canada or Australia. That will come eventually, in my opinion. But that's quite a radical belief. The real conservative and practical belief is that we are going to see cryptocurrencies adopted in emerging markets. And this goes to kind of the virtue signaling kind of nature, I think, that we have in the crypto space, where we kind of get a little bit caught up in our egos, where we'll be at crypto events. I've done this myself, and I kind of realized it after a while, where I was basically saying we have to find ways to bring adoption, right? We have to find ways to do this and that. Yet we're all sitting there checking our block folios. And what I came to realize is that because we're in the Western world, because we usually use currencies like the dollar, the euro, the Canadian dollar, or the Australian dollar, whatever it is, we have the very fortunate privilege that we have to be fair, a stable currency. We have a stable banking system. Surely we had things like 2008, but on the world stage, it is very, very comfortable rather than other systems. Not to mention the infrastructure we have. And in Europe, you have the tap and go with your credit cards. It's all very convenient. And yeah, sure, you have inflation and things like that. But I hope you get my point here, guys. It's more that cryptocurrencies will come to the Western world eventually. It's a matter of when we lose enough faith in our governments, we lose enough faith in our central banks, and predominantly lose faith in the value, the fundamental value of our currency. When we don't know if we can take dollars for our goods and services that we provide or our employment at a company, that's when you know people are losing faith. In emerging markets, that's the case. That's the case in Venezuela. That's the case in Argentina. That's the case in a whole bunch of countries around the world that have either experienced hyperinflation or don't trust their government. So anyways, that's to the point of the article. Now, I want to also clarify one other thing before I get caught rambling for too long, and that is a lot of people saw a video that I put out yesterday where I was talking about the idea that not getting stuck into crypto. And what I meant by that is kind of attesting to this point. This idea that people get stuck in the obligation that they have to stick to crypto. And I actually kind of fell into this myself. When we were at like 18, 20K, as I shared with everyone on my channel during my daily updates, I got out heavily out of altcoins because I knew that the euphoric period was going to end, but I still stayed in Bitcoin. And I felt a moral obligation to stay in Bitcoin. I was like, I'd hate to have, promoted Bitcoin, and well, not so much promoted it, but stood by Bitcoin so much, and to just leave it like that. And because of that, I took a pretty heavy loss, guys. And I've been feeling the pain much like a lot of other people in the crypto space. But that's a key point to take away, is to not feel trapped in something, guys. To realize that if you have opportunities at your hand and it's not the time for world adoption of cryptocurrencies, that there are other markets. I never said to capitulate. A lot of people thought that, Nick, this is not the time to get bearish. And I'm not bearish. I love crypto, guys. I love discounts. That's why I'm waiting, hopefully, to get it at the 3,000 to 4,000 range, pick up some serious positions, and hopefully average down and make my position even larger. I love cryptocurrencies. That being realized, the only thing I wanted to share with you all is that because there's a lot of people who got into crypto for the first time, that was the real first market, that there are a wash of different opportunities across the world. And I really learned that when I was trading equities. But when I started learning about Forex, and I started learning about cryptocurrencies, and I started learning about all these different markets, if I would have stuck to equities, that wouldn't have been good for me. If I would have said, I don't know what these cryptocurrencies are, I'm going to stick to my value-driven stocks, even though, well, stocks can be manipulated. They can be propped up by false buying activity like stock buybacks. They can be, propped up by low interest rates and the banking system that has an incentive to keep on building an asset bubble. There's a lot of craziness in the world, but it's a matter of filtering out through the noise and realizing, A, that you have a lot of opportunities, and B, to take those opportunities if you have the ability to, and that you're not. I think the last thing I would think we want to make sure is that we're not harming anyone in the process. We're not investing in something that we don't like, So that's really the only key thing you have to worry about. But after that, it's just a game of buyers and sellers. So anyways, I apologize for rambling on there, guys, and I wasn't ranting at you. I just wanted to make my point clear that I'm always going to be here. I love cryptocurrencies, and there's so much exciting things going on in the crypto space. So if you thought that I was capitulating, don't think that, guys. I'm always going to be here. Love you guys, and I hope you guys stick with the channel long term and stuff. I just want to provide coverage on a lot of markets because I'm a macro guy. Speaking of macro, we need to talk about the big picture of what's going on in China and the U.S. Well, this is really a deal that was going on in Argentina, but this is referring to the China-U.S. trade war, the continued banter back and forth of tariffs, talking about, China not respecting intellectual property, the trade deficit, all kinds of stuff. It's a really kind of big encompassing topic, and it's hard to kind of get a breakdown as to what's really happening because the media fluffs things up sometimes. What's nice is that financial media tends to be at least a little bit more reasonable and fact-based, but I'm looking at the BBC and stuff and a lot of other mainstream outlets. They sometimes don't get towards the deeper surface, and that's where you sometimes have to get a little bit opinionated. But a lot of the times it has to do with following the money, so you can avoid being too biased sometimes. So let's go ahead and talk about this. So this was a temporary meeting. This was not a trade agreement. We have not reached to that stage yet where both President Xi as well as President Trump have come to an agreement between their board and the individuals who are helping to reach this trade deal. We have not gotten to that point just yet. But we did have a temporary resolution, and some of the things down here will kind of signify to what we are agreeing upon between the two countries. So let's go ahead and read through these, and I'll try to provide the best picture I can. So it states that the U.S. says China agreed to purchase a not yet agreed upon but very substantial amount of agriculture, energy, industrial, and other products from the United States to reduce the trade imbalance between the other two countries. And I'll be fair, guys, out of these, it's probably going to be agriculture. Because agriculture is really the U.S.'s biggest export to China. It's a big reason why we will never go to war with China, in my opinion. A lot of people think that war with China is inevitable. But even if China was to outlay some of its agricultural business with other countries, meaning like maybe take imports from other countries like India and other areas of the world, the rest of the world is already struggling to feed its population. China depends heavily with its over 1.3 or 1.4 billion individual population to feed its country. And a lot of that gets exported out of the United States and imported into China. So big reason why I don't think you'll ever go to war, because half of China's population would starve in a matter of a week to two if the United States was not doing trade with them. But anyways, another topic for another time. Just thought it'd be interesting to share. Going on, though, both sides are pledged to immediately begin negotiations on structural changes, coming together, agreeing on what they want to change, with respect to forced technology transfer, intellectual property protection, non-tariff barriers, cyber intrusions, and cyber theft. So really the big one here, and they actually put it as well, the first part is, forced technology transfer and or intellectual property protection in this case. China has been a massive violator of intellectual property for the past few years. And you can just see this is kind of the mentality of a lot of Asian businesses. And I don't mean this in a rude way, but you can see it. I've gotten to travel to a lot of areas in the world, and I understand China's business model because I used to invest in Chinese companies. The thing about China is that they not only violate a lot of intellectual property of the United States, but they have a very big belief, and this is something that some people would understand and agree with, that if they can take a business model that exists and replicate it and bring a lot of that economic activity and keep it in their own economy, very, kind of populist, Trumpist kind of view, that's what China's doing. And again, this is kind of a banter between countries, making sure they both get a fair deal out of whatever they decide to do. So again, this has been a common trend in China, and it's been something that's dented out a lot of U.S. business, which has turned from rather a manufacturing economy to a technology-based economy. It's very hard to protect that on the international stage. So anyways, last point here. President Trump said earlier this year he wanted to stop the unfair transfers of American technology and intellectual property, again, proving to the point here of what's going on. I think it's probably one of the biggest issues that this trade war is going to hopefully lead a resolution to. But in final summary here, it's really about tackling an issue that the United States has a massively distinct deficit from China. Pretty much that the U.S. takes in way more in regards to importing stuff from China than China imports, exports from the United States. You can see here that both economies have their total import of goods from each side, and along with that they have almost near matching tariffs. In the case of the U.S., we've actually have a list of threatened tariffs as well that would stack on top. But as we can see at the moment, these tariffs, China has, on an equitable weighted basis on the overall deficit, more tariffs than the United States does on China's deficit. And this is why I think China is very eager to make this meeting, because if this happens, if we stack on top of what we already have in deficits, practically doubling, on the tariff on China's deficit, our deficit with China, if we double that, it is going to send shockwaves not only in the U.S. economy and in the Chinese economy, but both governments not only believe and know that it is a tax on both of their economies, it is going to hit both of them. Trade wars are never pretty, and I think Trump and Xi understand this very well, but they try to play their cards as long as they can. They try to see who will waver first and who will give the optimal deal. Now, to put it in summary, what do I think is going to happen? Is this the first proper step into, reaching agreements on intellectual property violations and making sure that China stays in check with that? And then also as well that the United States maybe isn't so forceful on reducing the difference between the deficits of China and the United States. Look, guys, you can see here, I'll go ahead and take it over to the stock chart here because we're actually 9:45 here. Markets opened up. We're back above the 50-day on the Qs. And right now, we really opened up at a very nice high level here for the NASDAQ. But I got to be fair here. until we see something on paper, guys, I really am not going to get too excited. The reason the market's very much up is that the algos trade on these types of news. They read the headlines, they hear, China, for example, has reached a temporary agreement. They are taking some interesting first steps, but I got to be fair with you all and be realistic here. On the fundamental side of things, the thing is that not only is China probably not going to respect intellectual property, because this is going to reverse years of kind of ignorance on what's been going on in China with a lot of US and European tech. But along with that as well, there is a clear trend over the past few decades that, for example, Trump is not the only president who has implemented tariffs. We've seen this under the Obama administration with automobile parts such as, I remember I was reading one the other day about tires being imported from China. You also had, for example, the Bush steel tariffs. And the reason the United States does this is because it's a game of cat and mouse. Other nations have had little to no respect under trade agreements. This is something that's happened for years between Canada, between China, between Europe. No one. It's like we keep on, coming to these fancy agreements where world leaders get together and then they turn a blind eye to actual agreements that they met under massive institutions of world governance and world trade. Practically every world trade agreement tends to not lead to much because of the prisoner's dilemma. This is a game theory aspect that pretty much says, we could cooperate together and we could, both put in a little bit of our effort and reduce, for example, say pollution or reach to certain things that are going to provide a benefit to us, but also a negative on both sides for a certain trade agreement. But the thing is, everyone wants to go for the hope that the other side is going to cave in and do their job, and then they're not going to have to do their job. And that's the same thing with every single agreement. It's a very sad reality, but it is the truth. Governments will do everything they can to get the best deal in regards to their economy in this case, because they need to keep GDP up. They need to keep economic activity going. And that's kind of the moral of the story here. So I don't know if an actual paper trade agreement is going to come into fruition. We'll have to see on that. I think more than anything, I'm not trying to be a negative Nancy. I'm quite an optimal person. I really don't think anything fundamental is going to come out of it. Maybe some protection for IP, and then the U.S. kind of wavers off from enforcing this idea that we need to get an equal balance on the deficit. So maybe that's the case. Going on here, let's go ahead and talk about Deutsche Bank. So the chief of Deutsche Bank has dismissed a potential takeover, the potential speculation of a takeover for Deutsche Bank. And I want to spend some time to talk about this, guys, because this really doesn't come as a surprise. This has been in the headlines for a while. A lot of people have asked me, Nick, you talk a lot about Deutsche Bank. Is there potential for an acquisition or merger? And I say no. No. And the reason I say that is because there's really been two candidates. UBS, which is a very well-formulated Switzerland bank, the United Bank of Switzerland. And you also have the other different bank in Germany that really owns a major stake over Germany's lending and investment market, which is Commerzbank. The idea is that they would either merge with Commerzbank or get acquired by UBS. I, as UBS, would not want to touch Deutsche Bank with a 10-foot pole with the recent talks of money laundering, not to mention still their overexposure to derivatives. Now, if I were to see that over the next quarter or two, as their CEO has stated that they're going to start turning a profitable quarter in the next few quarters, I'll wait and see if that happens, and then maybe talk about their transitioning business model and acquiring them. But to Commerzbank merging with Deutsche Bank is even more ridiculous. The idea that you would have two banks that have issues of their own, that don't seem to be able to manage the direction of their company, and are really caught up in a lot of bureaucracy that you find in a lot of major, and not to mention just banks, but well-established companies, it would be a match made in heaven for disaster, pretty much speaking. These banks would not be a good merger. It's like putting in a problem and a problem together. You don't get two wrongs don't make a right in that case, to put it lightly. So anyways, yeah, I would say that this is not the case, guys. And this is actually kind of an issue for Deutsche Bank. No one really wants to touch Deutsche Bank until it's unless it's a bunch of it turns from a bunch of talk like it's been for the past few quarters and years that, oh, we're going to turn ourselves around. Deutsche Bank is not in the worst position that many people think. It's got a chance to get out of it. But if it turns out that the money laundering case was what Deutsche Bank was involved in, and it's becoming quite fact at this point, If that's the case, and the German government sets high penalties like they did with companies like, for example, BMW with the scandal with the emissions, for example, if this continues to grow, or sorry, Volkswagen was the company. I'm mixing up my auto manufacturers. I'm not a car guy. But if you have the same issue like they did with Volkswagen, where they get massive fines taxed onto them, at least in the short term, it is going to be nasty for Deutsche Bank, which is already in one of the weakest positions out of most international banks. So again, I would watch more for that. That's going to be the determining factor if Deutsche Bank goes under or is close to going under or makes it out of the hole that they're in and actually becomes a relatively decent bank if they can make that transition from equities-based derivatives, which has been where they're exposed for the past few years, into the lending market, commercial lending. They are pretty well positioned in Germany. I have to give credit to that. And going on here to take a look, guys, at equities. Again, as I stated, I don't know where things are going to go by the end of the day. You can already see the market is selling off the gains here. Any kind of gap up usually is going to probably see a correction lower. And if this comes down to close, that is going to look not only very nasty on the chart, but it is, again, going into the fact here that we have lowering lows here on the NASDAQ. And out of all indices, this is worrying to see because the NASDAQ is what's carried the market. It's the FANG stocks. It's the small and mid-cap tech companies that have just IPO'd. And we've not only seen in the IPOs that they're faltering, but in this case, again, I think everyone's selling the rally, guys. It's become quite clear here. You've had pretty much 3 to 4 tops here that are lower than the previous high. So again, as we've broken this uptrend line that was held for quite some time on the NASDAQ back here in 2017, markets are on edge. And the fact that we can't get back above there is a really good telltale sign that we might be setting up for a longer term correction. And this goes, again, I don't want to waste too much of your time, guys. It goes with the S&P 500. We're now starting to, again, roll over these highs here. If we go down to take a look at the Dow Jones Industrial Average, again, 3 lower highs here for the Dow Jones. And if we take a look at the Russell 2000, even worse. We can't even get up to these highs yet. I mean, maybe we can in the next few days if this, comes back and claims some back of its upward price action. But it looks like we're getting the opposite of a potential breakout pattern. It looks like we're getting a breakdown pattern here. So again, a little bit worried about that, guys. So long as you start to see the FANG stocks, in this case, I'll go ahead and get to the proper index here. I was almost clicking on something that's not FANG. They should just have a FANG ETF. I thought they had one, but in this case, again, FANG stocks making lower and lower highs. If you start to see things roll over and or get rejected at the 50-day here, we have yet to see the real sell-off in FANG stocks if that's the case. And you can take a look again, guys. Some of the large plays like Amazon, I won't repeat myself too much. You can see here again the same repeating pattern. We have yet to see real bloodshed here, guys. Equity prices are still exorbitantly high. We're extremely extended away from these monthly moving averages, which again, it will take time to reach, but you could very well see Amazon come down to the 50-month here, approaching $1,000. Like, that's a 50% correction. You could easily see that with these exorbitant levels. Now, Amazon and a lot of other tech companies, they're great. They've expanded a lot. They've turned much more close to profitability, but equity prices are overextended, and the stock buybacks are not proving to be enough. And if you need that example, Apple is that right there, guys. I don't know why it's not going to the chart, but you can see Apple announced the largest stock buyback package in history, $100 billion back a few months ago. And their buyers, the people conducting the stock buybacks, are not able to prop up the equity. So, again, very important thing to realize, guys. You can see here on the monthly, we see it's tended that when Apple and the major tech companies come up into the overbought area for the monthly chart, that you tend to see pretty sharp corrections. And I think that at the peak of this equity bubble, it's time we start to see some even more blood going through some of these players that have been profitable for years. All right, let's go ahead. Let's take a look at commodities, guys. I know I'm being a negative Nancy. Going on here to take a look at gold. Gold, I'm really interested in here at these levels. Again, I'm not so much focused in gold at the moment. I think you will see a breakout in gold and silver if gold can get above $12.40 in this case per ounce. But again, as I stated, more interested in silver in the long term, guys. Not only is silver holding on a historical support level here, as we can see here back here in 2016, but this is a level that has historically held not only as resistance previously, but turned into support before the massive rally towards the $40 and $50 range for silver. And I think we could very well see something not to $40 or $50 this year, but we could very well see silver pick up here if it continues to hold this bottom like it is with these resilient bounces back above the $14 level. So really interested in that. My big play, though, of course, URA. I'm interested. We're getting very, very close. Every time I see it test up to here, I'm like, is it enough to break through? Is it enough to break through the wedge? And what I like is that if it isn't, you can tell quite quickly. You can sell it, and then you can hopefully pick up down at the lows around $12. It's been a repetitive trade that has so far worked over the past 2 to 3 years. So again, look for those opportunities that repeat themselves. And for the longer term trade, investing in URA, again, what I'm waiting for, and again, you guys got to determine what you care about and what you need to see before you can see it as a good investment. I'm waiting for a real breach of this. And I think after that, you could get a very similar rally to what we saw back in 2016 to the early part of 2017. Which I traded in the past. It was a good trade, but I think that was just the beginning. I think in URA, you've got a long way to go, not to mention some of the individual uranium miners, which in the newsletter we started to talk about, some of the uranium miners that I'm watching going into the next month. But I think that there's a lot of interesting plays, guys. And again, going back to that point that I talked about, there are so many different trends, and sadly, guys, they're not always going to be in cryptocurrencies. So it's important if you're a trader and speculator, and you have that freedom to be able to do that and do swing trading and long-term investing in different sectors, to take upon those opportunities when they arise. That's my big lesson for the day, guys. Hope you guys enjoyed the topics we talked about. Sorry for rambling as always. I hope you enjoyed my rambling, for sticking around. Anyways, thank you all. I hope you have a great day. And if you guys have anything you'd like to see in the next video, leave it down in the comments down below. But until then, I will see you all in the next video. Stay tuned.